Pinterest stock is up over 5% today on the back of an analyst upgrade from Goldman Sachs. And throughout 2022, it's been keeping relatively stable compared to some of its peers. Snapchat and Facebook, or Meta, are both down over 50% year to date, whereas Pinterest is down about 30% year to date. During the same period, Pinterest has also gone through a change of leadership for their CEO. They've gone through an activist investor in Elliott Management taking an involvement in the company, and a continuation of heavy acquisition rumors from both PayPal and Google. And in this video, we're going to be talking about the analyst upgrade from Goldman Sachs, and overarchingly why Pinterest has been so stable throughout the year, and where do we go from here with that stock. Before we get into the most recent upgrade, let's do a quick assessment of the past year. So first of all, why Pinterest? Well, in 2021, I would have argued that this stock is a pure growth play, and it's an advertising business that's growing very fast. So that doesn't explain though why Snapchat and Meta are both down way more than Pinterest is down. Especially after the Apple iOS changes, it affected Meta and Snapchat disproportionately, it seems, versus Pinterest, right? And we know that Pinterest really began their downfall as early as Q3 of 2021, when they reported earnings and their monthly active users started plateauing and then later started declining. The trouble in their monthly active user count was all due to Google's SEO changes that affected the searchability of Pinterest's content. So at a very high level, Google changed the way their algorithm was set for search engine optimization, and this negatively impacted the way that Pinterest appeared in people's searches, which led to less overall traffic going onto the Pinterest website. Now, Google had done similar changes back in 2018, of which Pinterest had bounced back. It affected them negatively for several quarters, and then they were back in the running in 2019. And when I talked about it, I covered this all in a video back in Q3 or Q4 of 2021, talking about Pinterest, talking about the SEO changes in depth. In that video, I mentioned that Pinterest was also going to bounce back. Now, from the initial get-go, it seems that though this is the case. Goldman Sachs analyst Eric Sheridan yesterday upgraded Pinterest to a buy rating from a neutral, raising Goldman Sachs' price target from $24 to $31 for Pinterest. Now, this is a pretty large upgrade. It's around 30% higher, and the entire reason behind this upgrade is the improved growth trends. In other words, the headwind that they've been facing for the past few quarters, i.e. the monthly active users declining, is now stabilizing and actually tracking higher. The note stated, quote, although the digital advertising landscape remains mired in uncertain times, the analyst at Goldman Sachs is turning more positive on improved user growth and engagement trends for the company over the short and medium term. Sheridan adds that he sees potential for upside to revenue growth trajectory and operating margin estimates moving into 2023 and 2024, stating that his recent analysis boosts his confidence in Pinterest's ability to grow monetization, number one, and capture a greater share of ad budgets as the company executes against its shopping and commerce opportunity, number two. The analyst also sees Pinterest being positively levered to long-term secular growth themes, such as ad spend shifting online, social commerce, and the creator economy for the long term. So what does all this mean? If we look at some of the data, we can see that Pinterest is on the uptrend again. And a lot of the headwinds that they had back in late 2021 are actually starting to turn around for the positive. Here's a Twitter post by user Umer, who has some web data on traffic and engagement for Pinterest. In his thread, he states that Pinterest has shown relative strength lately. Based on the data available as of July 2022, it appears that its user engagement situation is improving. From June to July 22, the traffic to the platform has increased by almost 16%, with over 1 billion visits on the core platform. The post continues with a country breakdown for the traffic onto Pinterest.com. The US remains the top country sending desktop traffic to Pinterest. It also saw nice engagement growth in India. As we know from Pinterest reporting, the US is heavily monetized by the business, whereas the rest of the world segments are barely scratching the surface from a monetization perspective. In fact, this is one of the core reasons why I personally love Pinterest, is the runway for growth, for further monetization in the rest of world segment, the opportunity for heavy global expansion. Umer continues in his thread to break down the traffic by gender, highlighting a pretty even split, with the number of male users increasing to 47% on the platform, and females are the primary users of Pinterest at 53% of the platform. And I think the female dominance on Pinterest kind of makes sense anecdotally speaking as well, given the value proposition of Pinterest being sort of this online mood board or this visual search engine type of product. And diving a little bit deeper into this, one of my main questions that I found myself asking was to break down the reason why Snap and Facebook have fallen so dramatically over 2022 in comparison to Pinterest over that same period. One could argue that it was the positive catalysts around Pinterest that ultimately softened the blow of how much the stock could fall. Elliott Management taking a stake, Bill Reddy replacing Ben Silbermann as the CEO. Pinterest is not as heavily impacted by the iOS changes for advertisers from Apple as Facebook and Snapchat would be. And just to recap, this is because Pinterest users actively search for products with a very high intent to purchase, whereas Facebook ads are essentially pushed to users and curated based on user-sensitive search data. So the chart that I'm putting up on the screen here illustrates this point. It is by a Twitter user. This is part of his larger Substack post, which I'll attach in the description below. But it breaks down where Pinterest falls. And I found this chart particularly interesting because it perfectly aligns with how I personally see Pinterest as well, and how I've been explaining it in these videos for years now. Simply put, as an intent-based visual search engine that's closer in comparison to Google and Amazon, and further away in comparison to pure social media plays such as Facebook, Instagram, or Snap. This is also the reason why Pinterest is less affected by these iOS changes from Apple. And as a result of all this, comparatively speaking, Pinterest has been a safe haven in the overall market, let alone in the growth stock category. I mean, many growth stocks have fallen 70 to 80% year to date, whereas Pinterest has fallen only 29% year to date compared to the S&P 500 that's fallen 22% year to date. So very closely tied there. Ultimately, I think it means that the markets understand this relationship. Number one, they understand that Pinterest is more desirable as a solution, and that the headwinds that they had with regards to the SEO changes were ultimately temporary, that the monthly active user count was going to be on an uptrend again as the business continues to execute. Also, the fact that the company is still growing, number one, has a high runway for growth for monetization for the rest of world segment. Number two, has a huge percentage of the market cap as cash on hand. I think Pinterest has like $3 billion plus cash on hand. And finally, the fact that they are debt free, and also the fact that they are sometimes profitable, sometimes not, but the operating loss that they do report is pretty much negligible in terms of what they can cover from a cash position. In other words, they have a very big safety net if they had to rely on their cash position. Now, all of the other catalysts throughout 2022, the speculation around the potential buyout from Google, Elliott Management stepping in potentially to sell the business to an investor, the inclusion of Bill Reddy as the new CEO, and their ultimate push into e-commerce as their new business direction, all of these signs support a softer landing for Pinterest relative to the market. However, I personally believe, and I subscribe to the idea, that there is a narrative supporting Pinterest being bought out by a larger player in 2022, or at the very latest by the end of 2023, seeing as all of these pieces are falling into place and the stock price is holding itself very strong. And essentially what that means is the market is showing relative confidence in Pinterest business prospects moving forward. Now, with regards to the Goldman Sachs upgrade from neutral to buy from $24 to $31, I think that ultimately signals strength for other analysts to follow in Goldman Sachs' shoes and upgrade Pinterest stock. I mean, we've seen this multiple times with analysts sort of piling onto each other in terms of their upgrades. And look, I know that valuations have been battered. Cash flow and cash on hand are the most important aspects for a business right now in this period that we're in. Because just as me and you are buying the dip, so too are large companies now buying the dip. I mean, we recently saw Poshmark get acquired last week, a year after their public debut. Not to mention possibly the biggest acquisition over the past couple of weeks around Elon Musk buying Twitter for the full price at $44 billion. Interestingly, also Elon Musk mentioned turning Twitter into a super app similar to some of the Chinese apps that we've been seeing, and this led to speculation as to whether Pinterest's business would ultimately suffer as a result of this. And just a couple of points to respond to this. I think number one, all competitors would suffer if Twitter became more optimized. The first that would suffer would be Facebook and Snap and Instagram because they're direct competitors, but Pinterest is sort of an indirect competitor, but they would also suffer. But secondly, I think it's going to take a long time for Twitter to be what Elon Musk plans for it to be, for those features to be developed. Finally, a Twitter super app is all the more reason for a big tech company such as Google or such as PayPal to snap up Pinterest and incorporate it into their consolidated product offering, simply to be able to compete if nothing else. And look, I wouldn't be surprised if we saw more acquisitions because the valuations of these smaller companies right now are very fair, at least relative to what we've seen over the past several years. And ask yourself, who would have the dry powder available to make these acquisitions? Well, clearly it's the big tech companies, right? The companies that have large cash positions. Apple number one, Google number two, they're both in prime positions to make acquisitions of smaller companies. So there's a lot of things to love about Pinterest right now. The increasing monthly active users, all of the catalysts around the new CEO, the e-commerce direction, the potential acquisition of Pinterest. I mean, a lot of companies have been poking their nose into this business. Last week, I personally, subscribing to all of this notion, bought 2025 leaps for Pinterest with a $25 strike price. And this is all in addition to my long position. Pinterest is, I think, my fourth largest position, something like that. And personally, look, I'm confident that the business will be trading higher in years to come. I talk about Pinterest on this channel regularly. I've done dozens of videos on the company. If you do enjoy these videos, please subscribe for more. Please share this content out if you think it's valuable for other Pinterest shareholders. Earnings for the business is around the corner. And I think the market, with regards to earnings, will ultimately still trade Facebook, Snap, and Pinterest in a bucket, in a pair, despite the fact that they're differentiated value propositions. Meaning that if Facebook misses earnings or if Snapchat misses earnings, Pinterest will also suffer as a result of that. I think there is also a possibility of Pinterest itself missing earnings. However, given the recent data that we've seen around web traffic and the possible turnaround in monthly active user count, I'm confident personally heading into this earnings that Pinterest is going to beat. Especially with the Goldman Sachs upgrade, the Elliott position, the Google buyout rumors. If Pins, on top of all of this, reports great numbers, I'm expecting a lot of analysts to start piling onto Goldman Sachs and start upgrading the stock once again, which would send it into a positive momentum. Time will tell. Deep down, I still subscribe to the idea that Pinterest is going to get bought out by the end of 2022. If not then, by the end of 2023 for sure. As always, for right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.